While Tim Capes tries to focus on his young family, the cost of his mortgage weighs on his mind.
The interest rate hikes have certainly been painful.
Every time interest rates went up, so did his payments. So he recently switched his mortgage from a variable rate to a higher fixed one.
To get that peace of mind that it's not going to keep going higher and higher, at least not for 5 years, was worth it for us.
While some homeowners will feel the squeeze, borrowing will also get more expensive for potential home buyers and anyone who relies on a line of credit to get by.
The households that are going to be impacted the most are the ones who are already struggling.
Small business owners may pay more on their loans too. This brew pub has only been open for 2 months.
To get hit at this early stage of the game, it doesn't feel nice.
The Bank of Canada started raising interest rates from record lows in March. Today's drastic hike of 100 basis points is 4 times the average move by the central bank. Policymakers called it difficult but necessary.
By front-loading the increase in interest rates, we're trying to avoid the need for even higher interest rates further down the road.
In Canada, inflation has been relentless, hitting 7.7% in May, a level not seen in 40 years. And it's a problem around the world.
We have supply chain disruptions, really high oil prices, pent-up demand coming out of the pandemic. We're in new territory here.
The central bank can't do much about those global drivers, but higher interest rates will cool domestic spending and hopefully ease the price pressures which have caught policymakers off guard.
They're playing a bit of a catch-up here, and that's partly why they're going up so fast.
Over here.
Back in Markham, Capes hopes higher interest rates will be worth it.
I'm hoping that we're going to start to see prices, especially for things like food and gas, start to come down.
A little short-term pain for long-term economic gain.
Okay, so Nisha, I'm sorry to ask the crystal ball question, but I have to ask the crystal ball question. How high could interest rates go?
Well, Andrew, we're already seeing house prices come down across the country, and that's a sign of higher interest rates working. But the bank says inflation won't get back to where it wants, 2%, until 2024. So it warns that its key interest rate will go even higher, maybe 3% or higher.
Right, and it is quite the balancing act, right? The Bank of Canada trying to curb inflation, but without causing a recession.
That's the goal, and it's what economists call a soft landing. Now, one economist I talked to today thinks it's possible. Others aren't as optimistic. Royal Bank has forecast a short recession for the beginning of the year, but the economy has been strong. Unemployment is at record lows, and this is really an unusual situation. So when it comes down to it, the rumblings of a recession won't faze the central bank. Its job is to bring down inflation, and while it might not want to cause a recession, it will be prepared for one.
Right. Okay. Nisha Patel, thank you very much.
You're welcome.